Welcome to The Explainer. Right now, the Bitcoin market is being pulled into completely different directions by these incredibly powerful, conflicting forces. What we have is a classic story: short-term fear going head-to-head with a massive long-term shift. So, let's kick things off with a bit of a mystery. In a market that literally never sleeps, a market with thousands of data points flying around every second, there's one single number that has traders and analysts everywhere just holding their breath.
And that number is $82,000. Seriously, this one price could define Bitcoin's entire path for the near future. It's become this critical pivot point for the whole market. Okay, so let's really dive into why. To get started, we've got to look at the market through a microscope. We're zooming way in on the immediate pressure, and it all comes back to this one price. So, why all the focus on this specific level? Well, it all comes down to who bought their Bitcoin, and more importantly, when.
And this is what's so fascinating. You've got two of the most powerful groups in the market today, whose psychology is anchored to the exact same price. On one side, you have this huge new wave of demand coming from the spot ETFs. And on the other, you have the active, day-to-day traders. Both of their average buy-in prices are clustered right around $82,000.
So having this shared line in the sand, well, it creates a pretty precarious situation. And that brings us to the immediate risk. What happens if the price just can't hold this level? What if this all-important support line just breaks?
To really get why this is so dangerous, we need to talk about a simple but super important idea called cost basis. All it is the average price that a group of people paid for their coins. So if the current price is above that, they're in profit. They're feeling great. But if the price drops below it, they are officially underwater, holding at a loss. So if $82,000 gives way, it could set off this chain reaction, like a bearish domino effect. First, the price slips. Boom. All of a sudden, those massive investor groups are in the red. The psychological pressure to just cut your losses and get out starts to build. And that fuels more selling. And if you look at historical patterns, that could send the price tumbling, searching for its next major line of defense.
And that next line of defense? Analysts call it the realized price. You can just think of it as the ultimate cost basis for the entire market, the average price of every single Bitcoin out there based on the last time it moved. And right now, that level is sitting all the way down at $56,000.
So the main point here is that the short-term risk, it's a big deal. A failure to hold that $82,000 line could trigger a cascade that chops nearly 40% off the price from recent highs. That's the bearish case, plain and simple.
Okay, but while all the traders are obsessing over that one number, there's a much bigger foundational shift that's quietly reshaping the entire future for Bitcoin. So it's time to put down the microscope and pick up the telescope so we can see the long-term view. This recent announcement from the U.S. Commodity Futures Trading Commission, the CFTC, is being called a massively huge deal. And you have to understand why this is so different. This isn't just another investment product. This is a major regulator treating spot Bitcoin, the actual asset, just like any other major commodity, like gold or crude oil.
Now, to really understand the long-term impact of a move like this, we don't even have to guess. We can actually look back in history for a really powerful parallel that completely changed the game for another famous asset.
Back in the 1970s, gold went through this exact same transition. It went from being this sort of fragmented commodity to a globally recognized asset. And the trigger was when it started trading on regulated U.S. exchanges. And the result? A staggering 4,000% price gain in the years that followed. That regulatory clarity literally built the foundation for decades of capital to flow in.
See, for years, because there weren't these regulated venues in the US, a huge portion of trading activity was pushed offshore. You had platforms like Binance capturing a massive share of that global activity. This new CFTC approval is designed to flip that script, to bring all that liquidity, trading, and oversight back onto US soil.
And this isn't just about a change of address. It's about opening a door that was pretty much locked to the biggest players in finance. This move gives Bitcoin the legitimacy of a recognized commodity, and maybe even more importantly, it provides the regulated, audited, and supervised rails that pension funds, big banks, and major hedge funds absolutely require before they can invest serious capital. And believe me, the demand is there. According to a recent survey from Coinbase and EY, a staggering 86% of institutional investors either already have or are planning to get exposure to crypto. I mean, that shows you there is a massive wave of capital that's just been waiting on the sidelines, looking for the right infrastructure to finally be built.
And look, we have seen this movie before with other commodities. Take WTI oil futures. When they launched on a regulated exchange back in 1983, the trading volume just exploded. It went from a few thousand contracts a month to over 2 million in just a handful of years. Regulation builds trust, and trust builds liquidity, and well, colossal market growth.
So why does any of this matter to the average person? Because it fundamentally changes the market's entire structure. When you have more institutional players and way more liquidity, you get a more stable, mature market. Over time, that can lead to less of those wild price swings and just a healthier market overall. So, this brings us full circle right back to where we started. We have two incredibly powerful, competing stories that are pulling on Bitcoin's price at this very moment.
On one hand, you have the microscopic view, which shows us this immense short-term pressure cooker at $82,000, with a very real risk of a sharp drop down to $56,000. But on the other hand, the telescopic view reveals this fundamental, game-changing shift. You've got the historical path of gold and oil unlocked by the key of regulation, creating this brand new on-ramp for literally trillions in institutional capital.
And that leaves us with the one defining question that is going to shape the next chapter for Bitcoin and really for crypto as a whole. Is the long-term tectonic shift towards mainstream adoption powerful enough to absorb all of this short-term turbulence? The battle between these two forces is happening right now, in real time, and the outcome is anything but certain.